afternoon, all. Ira Epstein of Linn Associates with your agriculture wrap-up. And this wrap-up is for Wednesday, the 22nd of January, 2020, just after 2:25 in the afternoon, that's Central Time. I was watching in the Davos interviews this morning, the head of Cargill. He still doesn't think it's going to be an easy time for farmers. Well, neither does the market if you look at it. Your wheat down a little today, but it's been on a tear to the upside. So that one's okay. But the soybeans unable to lift itself. Meal market not going very far. The corn market seems to have found some stability here in the 386 zone. A crazy market has been cotton. It was down 201 points yesterday, up 189 today. It's almost like corn was. Remember last week? I think it was last week. You were down 12 or 13 cents in one day, and then you came back nearly that whole amount the very next. Been rough. Now in China, the city of Wuhan, and I think I'm saying that right, W-U-H-A-N, where the coronavirus started, they've locked the city down. So if you're reading my reports, I think I've been ahead of it. I don't understand why they didn't lock it down earlier than this. Now, lockdown means you can't get from the airports or a train station into the city. It's locked down. And those people are probably going to be stuck that way for quite a while. This is the Chinese New Year, basically. Travel, I think it's going to be hurt. That's one of the reasons you're seeing energy prices off a bit. Now the case is 17 people dead, 540 cases, and it's exponentially expanding. I watched this maybe an hour ago. The World Health Organization had on a stream about it as they had all their members. They have people on the ground now in the city, and they're going to give us better ideas tomorrow. But we in America, you've already seen in America, Atlanta, Chicago, now we're all safeguarding for it, so they're bringing in all kinds of staffs to catch people, but it just seems that this is running. There's no cure for it. It doesn't have to kill people. It's a severe type flu, but it depends how your immune system is. So it's very interesting. I'm no doctor, but I realize the impact on markets, and that's what you watch. Stock market still dealing with day two of the, I think it's 3 days of the opening statements, if you will, of the President Trump impeachment. And then we get into the question and answer period. I think that could be by Friday. It changes on us. In the soybeans, as I pointed out to you yesterday, we've fallen back into this 18-day moving average, which is often where the market decides what's it going to do. The funniest part is I was watching Bloomberg. They have their chart of the day, and guess which market they had on? Soybeans. So I'm watching, as soon as I saw that, my interest got piqued. I had told you when you took out this red line that could be the breaking down of this formation that we had, and it could have been a head and shoulders that fell apart here, and that's still what I think. Now, as I pointed out to you, this whole area here is your first support. So we're knocking on the door of it. Today's break took you right to the top of that area at 913, and that's where the market is down to. If we take a look at the swing lines, they are still bearish. You have lower highs, lower lows. You're always looking to see, is there a pattern that's there, and this is a bearish pattern. The market sliced through that 100-day average after hitting it 3 times in a row. You made one stab here that could be considered the fourth, but 3 you definitely hit. Now today you're breaking away from it. That puts into play what? The Bollinger Band. And if we look at the Bollinger Band, we're under it today. We were under it yesterday. The day before, the market finished at 929 3/4, and that band's 926.5. So you have 2 consecutive days under it. You could stretch further. What's really scary now is you got to watch your slow stochastics. Both numbers today are under 20. Both were under 20 yesterday, not the day before. If the market's going to convert from being oversold to locking in a bear trend, tomorrow's action will answer that. The odds favor the market's going to try to get to the right-hand side of the Bollinger Band, but is that going to be enough strength to stop it from embedding? And if it embeds, it gets even more bearish until that reading is lost. The meal market's plain oversold, hit for the first time, and I'll step you back here, in a couple of days, that lower Bollinger Band, and sort of stopped right on it. That's what I would expect. But the trend down Oversold, has hit again a downside target. If it rallies again, might get sold again. In soy oil, you've moved to the right-hand side of, if you can see this black dashed line, and that's all that you've effectively done. Now, if we take a look at the slow stochastics, both numbers today are under 20. Both yesterday were under 20, not the day before. Tomorrow's a crucial day in soy oil. It could embed, and if it does that set up the potential for another challenge of the 100-day average? The problem is nothing's friendly that I'm talking about. Everything's in the bear camp. Not the corn. The corn market lifted itself, and again, this 118-day average, both of these, 387.10, 386 and 3/4, it's playing the game with the market. We've hit it literally every day since right through here. Now, the trend is up at the end of the day. The bias is up. There's a negative. You're overbought. So if the market lifts, I think you'll run into a brick wall at 393 and 3/4. If it's going to break and it gets under 384 and 1/4, it's more of the same, just churning. Now, we had narrowed into a real narrow Bollinger Band. You see this right here. All we've done is widen it out a little bit on a challenge to the downside. We haven't really come out of that. Difficult market. In the wheat market, this is still quite friendly. You still have the higher lows, higher highs. You reacted and came back today against and closed just under the upper Bollinger Band, again to be expected, but very overbought. So this was your original resistance. You fell back, and instead of correcting much, you went up again. Now the question is, can that keep going that way? In the sugar market, this is called an embedded reading. So you've converted. And when you do that, it means that on pullbacks until the red line of the slow stochastic closes under 80, I'm expecting the pros to step in and support the market, continuing to look for higher prices. In the coffee market, all you've done is rally to the resistance now of the 100-day average. Now, let me show you something. When you first come down to that number, it's often a support zone. Not always, but often. Market played around it for 3 days. Now it's trying to get, as you can see, to do what with it next? Well, the fact that you're embedded tells me that if you take out 109.05, you could enter another leg to the downside. You literally have to get the red line to close over 20, and that's going to require a rally that holds. In the cocoa market, pulled back from the upper Bollinger Band, but you've been hitting it. You were running over it here. You got back under it. You just keep running against it with this bullish embedded reading. There's nothing bearish on these markets. It's pretty funny. The soft commodities all got friendly as the U.S. futures in the grains and so got bearish. Now, cotton. I don't understand yesterday's action. Yesterday, this market down 201 points. Lower highs, lower lows. And as I said, the one crop I feel certain that China has to buy is cotton. Number one, it's an export market to begin with, and it fits into what they need. Today, you followed through and came whipping back. You want to get killed? These are the ways to do it in these markets. Cattle market, still the continued grinding sideways. Just the continuation path. Support 126.07, resistance 128.45. Going home, the bears grabbed control again. You've got the lower highs. You certainly have the lower lows. So if they're going to follow through, they can't afford for 127.47.5 to be taken out. If it is, this could be support and you flip it over into the upper band. If they're going to follow through, then I'm looking for the lower Bollinger Band. Momentum sort of drifting sideways. Feeder cattle tried the bear side today. The market, as you can see, had rallied off the lower band into the 18-day average, stalled there for 2 days. Now it's trying the downside again. It has momentum with it. It has bias. It has the trend down. We'll see what it does if it can get to that lower Bollinger Band, and does it have any power to get through it. So far, it has failed each time. So I would think the pros, they're going to be taking money off against it just the way they did back there. Then we get to the hog market. And could this have been the day that the bears got caught? It's got every chance of it. Let me show you why. You had an outside day down yesterday. One of the things I've learned in my many mistakes in trading has been not paying attention to certain parts. And outside days are important because it's like they're telling you, oh, the market failed to rally and then it caved in again. It stayed with the downtrend. It hit the lower Bollinger Band. That's the cover spot as far as I'm concerned. Now, some traders might say, well, what about the next day? No problem. If you take out the high of an outside day, the day after or the day after that, 2 days after it's made, I call that a bear trap, and it often means the market's going to rally to the closest of a moving average or a Bollinger Band, depending where it happens on the chart. In this case, it'd be the 18-day average, and you took that out. Now, is it a contra-trend rally? Yeah, because you're still under the 18-day average, but you're in an oversold condition. It won't take much to see that happen. I'd have been nervous going home with short positions today. Do you find yourself asking yourself about these markets the way that I do? If you do, it's interesting. I got up today at 4 in the morning, 4. And I probably read an hour and a half this morning as I'm trying to find out more about this coronavirus. You know, the word corona reminds me of the beer that I like on the beach. And I'm reading more and more and I'm going, I don't understand how they're not quarantining. And I wrote that last night in my newsletter. At least today I saw that happening. But I give you these ideas, my thoughts. I start you off in the day, and we cover 40 charts on futures. I no longer cover the ETFs in my morning subscriber video. I do that in a different ETF video for traders, which I put out in the afternoon now. So that one comes out right after 3. So when I'm through with this one this afternoon, I probably go in there right after the close at 3, start recording that one, have it done. Then I'll come back in here and do a couple more of the videos. But these are the ones on YouTube. They're not the meat of what I do. They're the appetizer to get you into the meat. Do you understand what I'm getting at? Because in the morning, I'm going to give you the technical analysis. I've already read the newspapers well before you're up. I'm up before you, and I'm going to tell you the fundamentals at work, what's going on in the world. Do I see any entry spots, exit spots, stops, profit objectives? What am I seeing going on? And I do it in the morning in a slew of just commodity markets, as I said, and I make it easy for you to see because the charts will be in black. I'm not in them, thank God, at that hour for you. You're going to have more studies than you see in these videos. I'm going to cover the markets in this exact order each and every time, and there'll be a slide bar if you go to our website to watch the video, and it'll pop up and it'll say stock indices, or if you want to go to the metals, or if you want to go to the meat markets, the grains, you go right there. You don't have to watch the video for every one of these to get where you want. We make it easy. The idea is to give you trade ideas, to tell you what I'm seeing in the chart, bit of the technical analysis, the fundamentals to get your day going. Sometimes I have traders that write me and they'll tell me, hey, Ira, I'm able to do that 2-3 minutes in a day. I get right to the areas I want. I do charge for it. Why not? $7.95 for the first 30 days. And by the way, during this time frame, until I start charging for my Spider ETF videos, I'm throwing them into the mix as a free trial for you. We will start charging for those sometime in February, but this is still January and only the 22nd. So you're going to get that. You're going to get, if you want to stay with it, and there's no contract, the next 30 days are $15, or you can buy a 1-year prepaid subscription. It works out to be $156 for the year, and you get this morning subscriber video. To find out more detail, go to our website, www.iraepstein.com. Go under the word research. It tells you all about it. You can click here if you're watching me on YouTube. And when you get to our website, by the way, bottom right, if you want to sign up for just the Spider video, anything else you want, go ahead with that. I'm Ira Epstein. You have a great day, and I'll talk to you all later this afternoon when I cover the metal markets. I'm going to cover the spiders and the financial markets. You have a good day.